Bitcoin didn't start as a get-rich story. It started as a response to a broken financial moment, and became the most famous money experiment in modern history. Today, we're going to tell the full story, where Bitcoin came from, the crises that nearly killed it, and how it became a global phenomenon. Before Bitcoin, digital money had a major problem. If something is digital, it can be copied. So how do you create digital cash that can't be duplicated without trusting a central company? That question set the stage for Bitcoin. In 2008, a person or group using the name Satoshi Nakamoto published a paper describing Bitcoin, a peer-to-peer system where a network, not a bank, verifies transactions. Instead of trusting one institution, Bitcoin would rely on cryptography, incentives, and a public ledger. In 2009, Bitcoin went live. The first block, called the Genesis block, was mined, and the network began. At first, it was a tiny experiment run by a handful of people who believed money could work differently. Early adopters tested Bitcoin not just as code, but as money. Communities formed around mining, building wallets, and trading Bitcoin, often just for curiosity. As more people discovered Bitcoin, price swings became part of its identity. Bitcoin didn't grow smoothly. It grew through wave surges of belief, followed by crashes of fear. One of the biggest moments in Bitcoin's history was the rise and collapse of early exchanges. This era taught a brutal lesson. Bitcoin can be secure, but companies around it can fail. And that's why the phrase, "not your keys, not your coins," became famous. The network can keep running even when platforms break. Bitcoin's supply is programmed. Over time, the reward for mining blocks decreases in events called halvings. This is one reason people compare Bitcoin to digital scarcity, like a commodity with a predictable supply schedule. As Bitcoin grew, it faced a problem. More users means more demand for transactions. That sparked debates about how Bitcoin should scale. Disagreements led to upgrades and, in some cases, forks where communities split over technical direction. Over time, many people began to treat Bitcoin less like daily spending money and more like a long-term asset, something closer to digital gold. That shift changed who paid attention: traders, funds, companies, and eventually policymakers. To handle speed and cost challenges, developers built layered approaches where the base chain prioritizes security, while second-layer networks aim for faster payments. Bitcoin is still the same core idea: an open monetary network with rules enforced by the network itself. It's criticized, celebrated, and constantly tested, but it has continued to run. Bitcoin's history is a story of experiments, failures, upgrades, and survival. And the biggest twist is this: the next chapter hasn't been written yet. Stay tuned for the next video. Thank you for watching.